In this video, we're going to talk about the business owner's policy. The business owner's policy, or BOP, is a package policy that includes most of the property and liability coverages needed by most small and medium-sized businesses. It's similar to the homeowner's policy and the personal auto policy in that it packages together most of the things that are needed by these small, fairly homogeneous groups. Advantages to the BOP from the perspective of the insurance company are that packaging reduces adverse selection. This is because when you package a policy and put many coverages and covered perils together, you reduce the insured's opportunity to pick and choose only what they think they're going to use most. Packaging also simplifies the rating process from the insurance company's perspective, and it lowers administrative costs because all of the coverages are insured in one policy. Many insurers lower costs by using automated systems to underwrite BOPs, which is relatively easy to do because the rating process is fairly simple too. In some ways, the BOP is actually more coverage than other commercial policies. You'll see that as we discuss the BOP throughout this video today. Let's talk about eligibility for the BOP. While the BOP is a wonderful option for many businesses, many small and medium-sized businesses actually aren't eligible for purchasing the BOP. Most of the eligibility rules are related to the size and complexity of the business being underwritten. Insurers vary on types of businesses they will insure through their business owner's product. So just because a business gets turned down from one insurance company doesn't mean that they shouldn't keep trying, because another insurance company might have different, more lax eligibility rules. ISO eligibility rules, though, are that the square feet of the business floor area must not exceed 35,000, and the revenue must not exceed 6 million in gross sales at each location. Certain businesses are excluded, such as bars, auto-related businesses, manufacturing, financial institutions, and general contractors. In 2010, ISO introduced changes that broadened the eligibility rules. They changed the annual gross sales eligibility from 3 million to the 6 million I just mentioned, and the square footage limit from 25,000 square feet to 35,000 square feet. They also made more restaurants eligible for the BOP. Now let's look at the coverage form itself. Covered property includes personal property in apartments, offices furnished by the named insured, which is not actually covered by the BPP. It also includes property in the care, custody, and control of the insured at the same limit as personal property. We'll look at that again in a moment. With property not covered under the BOP, there are fewer exclusions than the BPP. For example, it doesn't exclude excavations, foundations, and underground pipes and flues. In terms of the covered causes of loss, basically this is the same as the special form. You can see the differences on page 11.8, but we'll talk about them further in just a moment. Now we're going to talk about additional coverages and causes of loss of the BOP. And in doing so, we're going to compare the additional coverages and the causes of loss to the BPP. Those additional coverages that are the same as the building and personal property form are debris removal, preservation of property, the fire department service charge coverage, pollutant cleanup and removal, and the increased cost of construction. Water damage and other materials are limited like the special form. Remember, this includes other liquids, powder, and molten materials. Additionally, the BOP provides limited coverage for fungi, wet rot, dry rot, and bacteria, much like the special form. And interruption to computer operations, as well as collapse, is similar to the special form. And then similar to other ISO forms, not the building and personal property, but first similar to the business income form, are business income, except that there is a 1-year limit instead of a specific dollar limit. And extra expenses are covered, as well as business income from dependent property, similar to the business income form of the CPP. Civil authority is also covered, but it applies for only 3 weeks, not 4 weeks, like the business income form. And then similar to the CPP's commercial crime program, money orders and counterfeit money are covered, and forgery or alteration. For an insured that needs broader coverage, like safe robbery and burglary, they would need to purchase separately a commercial crime program form. Now, unique to the BOP are glass expense coverage, fire extinguisher recharge expense. For many small businesses, they use fire extinguishers that can be recharged as their method of controlling fires, and the cost of recharging those fire extinguishers can be very expensive. Fire extinguisher systems recharge expense provides additional coverage up to $5,000 per occurrence to cover the cost of recharging or replacing the system, whichever is less. Electronic data coverage is similar to the additional coverage in the BPP, but it does have a broader perils covered. It's not named perils, and it also has a higher aggregate limit, $10,000, not $2,500, as in the BPP. Now we're going to look at coverage extensions. Under the BOP, newly acquired property is covered in the same manner as the BPP. For up to 30 days, it covers $250,000 for the building and $100,000 for personal property. Personal property off premises. The BOP has the same limit of $10,000 as the BPP. The BOP, however, is broader than the BPP. It covers personal property in the course of transit and temporarily not at an insured location. The BPP, the personal property off-premises extension, does cover property off-premises not in an insured location, but does not cover property in a vehicle or in the custody of an insured's salesperson. In terms of outdoor property, the limit for outdoor property under the BOP is $2,500 and $500 for any one tree, shrub, or plant. The limit for outdoor property under the BPP is $1,000 or $250 for any one tree, shrub, or plant, so the BOP is more generous. In terms of accounts receivable, the limit of the extension for damage at the described premises in the declarations is $10,000. The limit off premises is $5,000. Accounts receivable in the BPP is actually covered under the valuable papers and records extension. This limits recovery to only $2,500 per policy year for the cost of reconstructing lost information. Personal effects is personal property of an insured. Property of others is property in the insured's care, custody, and control. The limit is $2,500 under both policies. However, under the BOP, the personal effects limit is $2,500 and does not include property of others. Property of others is covered under the definition of business property. Whereas, under the BPP, the $2,500 applies to both personal effects and property of others on a per-occurrence basis. So in other words, if there is damage to personal effects and personal property of others in one occurrence or one loss, the two are added together when applying the limit, which might mean that there is less coverage under the BPP in some cases. Now let's compare valuable papers and records in the BOP to the BPP. Coverage is separate from accounts receivable in the BOP, but remember that coverage is part of valuable papers and records in the BPP. And only 7 of the property special form cause of loss exclusions are applicable to this loss. The BPP only covers specified causes of loss. And the BOP provides limits of $10,000 on premises or $5,000 off premises. The limit of the BPP for valuable papers and records is $2,500. And remember that the accounts receivable losses are also subject to that limit. Now let's look at coverage provisions limits. The benefits in the BOP that are not automatic in the BPP are: the BOP includes an annual building limit increase. The BOP also has an automatic seasonal increase, which increases the limit for business personal property 25% annually if the limit is 100% of average monthly business personal property values. So the first provision here provides an automatic increase for the building. The second one provides an automatic seasonal increase of 25% as long as the insured is carrying enough business personal property coverage. Let's look at policy provisions of the BOP, starting with deductibles. The basic deductible of $500 applies. No deductible applies to business income, extra expense, civil authority, fire extinguisher recharge, or fire department service charge. And windstorm or hail deductibles of 1, 2, or 5% are used in regions that are subject to frequent wind or hail losses. Now let's look at property loss conditions. The major difference between the BPP and the BOP conditions relates to the loss payment condition. BOP does not have a coinsurance requirement. Instead, it requires the insured businesses to carry at least 80% of the full value of the covered property just before the loss. This is known as insurance to value. If they carry 80%, losses are covered at full replacement costs. If they carry less than 80%, losses are covered at actual cash value or a proportion of the applicable limit divided by the property's replacement cost. For most businesses, this is an improvement over coinsurance. Now we'll discuss optional coverages under the BOP. First of all, outdoor signs. Outdoor signs attached to buildings are insured against all covered causes of loss up to $1,000 per sign. Outdoor signs not attached are covered up to $2,500, but only for fire, lightning, explosion, riot, civil commotion, or aircraft. So you do need to keep in mind those perils covered specifically for outdoor signs. Then the employee dishonesty optional coverage. With the employee dishonesty coverage, the insured is covered for direct loss or damage to business personal property, including money and securities, from dishonest acts of an employee. Various limits are available, so this is a nice addition that a business owner could get without purchasing commercial crime insurance. Mechanical breakdown. This is a scaled down version of the equipment breakdown policy. It covers fewer insured objects, boilers, certain pressure vessels, and air conditioners with a 60,000 BTU capacity. If this doesn't provide sufficient coverage for the business, additional coverage can be purchased through an equipment breakdown protection endorsement to the BOP. And then money and securities. This insures against the theft, disappearance, or destruction of money and securities used in the business. It insures money and securities at the described premises, in a financial institution, or at the named insured's or business partner's living quarters, and in transit between these locations. Take a look at the selected business owner's property coverage endorsements. Notice spoilage coverage, food contamination, water backup and sump overflow, electronic commerce, earthquake. Lots of things here can be added to the BOP, possibly for not much additional premium, meeting the needs of most small and medium-sized business owners. Now let's take a look at the liability coverage of the ISO Business Owners Program. The insuring agreements are similar to the Commercial General Liability form. They are business liability, which is equivalent to the CGL. There's coverage A, which is bodily injury liability, and coverage B, which is personal and advertising injury liability. And there's also medical expenses coverage, which again is equivalent to the CGL. That is coverage C, medical payments. And this might remind you a little of the homeowners coverages E and F. We'll talk more about coverage B, the personal and advertising injury liability, when we get to the chapter on commercial general liability. In terms of limits of the liability policy, there is a general aggregate limit known as the liability and medical expense limit in the BOP. The BOP has two limits, like the CGL. The most the insurer will pay for any one occurrence. There is a products and completed operations aggregate limit, which can be increased to 3 times the liability and medical expense limit by endorsement. It is also subject to a damage to premises rented by you limit and a per person medical expense limit. There are a couple more items that might be significant about the BOP. There is a professional services exclusion, which excludes liability for professional service, or in other words, professional liability. It doesn't cover, for example, accounting, medical, and mechanical services. However, there are several optional professional liability coverage endorsements available, such as endorsements for barbers, beauticians, veterinarians, funeral directors, optical and hearing aid establishments, and printers. There's also hired and non-owned liability coverage. Almost every business has an exposure to liability for hired or non-owned autos at some time. Just asking an employee to drop off something at the bank or post office on the way home might cause a vicarious liability exposure for the employer. So the BOP covers an employee when the employee is involved in an accident while running an errand for the employer. And that's the end of our discussion of the business owner's policy.